It's your emotions that will get the better of you. And if you don't master your emotions, or if you can't find ways on how you can prevent yourself from succumbing to emotion, either the emotion of fear and responding to that, or the emotion of greed and responding to that, it may not be a very, very productive long-term investing season for you. Hey guys, so in this video, I want to share a very, very powerful technique in investing in the stock market, which if you want to invest for the long term, especially in the US markets, this is something that will be very, very useful, especially if you're the type of person that's busy, you're hustling and grinding in your work, you're hustling and grinding in your business, or your profession as an accountant, a lawyer, a doctor is taking your time and attention, and it would be relatively hard to be able to time the market. And the reason why I'm saying this is that in the world of investing, I really believe this, that personal finance is more personal than finance. People always try to jot the numbers, people always try to create different techniques and scenarios on how they can be able to somehow time the market, which is possible because I'm a big fan of technical analysis, and technical analysis, in my opinion, is one of the best ways for people to be able to somehow find strategic areas in order for them to be able to manage their trade. But that being said, the personal side of finance, the personal side of investing is, it's your emotions that will get the better of you. And if you don't master your emotions, or if you can't find ways on how you can prevent yourself from succumbing to emotion, either the emotion of fear and responding to that, or the emotion of greed and responding to that, it may not be a very, very productive long-term investing season for you. Even for me, doing this for over a decade now, my biggest mistakes in investing is me following my emotion. And what I've realized is one of the best ways for me to be able to take out that emotion is to be able to make it as mechanical as possible, is to be able to create a framework where I get to invest in the stock market on a regular basis, on a powerful way, without succumbing to emotions. You get to do that by automating your investing, meaning on a regular basis, based on the amount that you would dedicate, that you would want to put in, an amount that you would want to invest, regardless of what amount it is. And if you've been following my videos, it's all about being faithful with what you have. That if you say you'd want to invest, say, $50, $100, $1,000 on a monthly basis or a quarterly basis, you follow suit. Because investing is all about discipline. Investing is all about being faithful to a plan. And auto investing is basically you dedicating a specific amount, you transferring it to a platform where you get to trade, and that will automatically buy a certain stock that you actually want. If you guys haven't seen the video that I posted last month where I talked about Shari-Shari, it's a platform that allows you to buy US stocks for $1, essentially 50 pesos, which is commission free. But not just that, it's the first time in our era as investors that we finally have a platform that allows you to trade global markets that's regulated in the Philippines. And one of the interesting features they have is auto investing, and this allows you to, as you transfer your money, as you transfer your funds from Philippine banks or from digital wallets like GCash to PayMaya to the Shari-Shari platform, what it actually does is it will on schedule buy a certain stock that you would actually pick, that you would actually want to purchase. And what's nice about that is it doesn't matter if the market is bullish, it doesn't matter if the market is bearish. But what's interesting about that is if you decide to put in a certain amount, it allows you to buy a certain number of shares for the month. Then it allows you to buy another one next month, then another one 2 months from now, with the ultimate goal of you building a base, you accumulating, and getting as much shares as possible. And I think that's more important, especially if you're busy, especially if you're a long-term investor. Building volume, accumulating, and putting in as much as you can into assets that are superior are massively better than trying to find where the bottom is or trying to avoid where the top actually is. This actually helps you if you're a doctor, you're a lawyer, you're an entrepreneur, you're a busy person that you're crushing it and making a lot of money from your work or your business, and you just want another asset class that you're actually building and accumulating something right there. So let's go to Shari-Shari, and I want to pick this particular stock. The ticker code is VOO, but what's nice about that is VOO is an ETF. that tracks the S&P 500. So I won't go into detail about what the S&P 500 is, but generally speaking, if you want to be able to at least track the performance of the largest 500 companies in the States, the S&P 500 is the way to go. And what's nice about that is it's a passive way for you to be able to earn in the market without you guessing and trying to see which is a more superior company, because at the end of the day, studies have shown also that passive investments or ETFs that track indices outperform the market in general. That's why I'm giving you this example. So let's make a decision. For example, you want to invest $100 per month, and again, $100 is relative depending on where you are in life. To some people, it may be a small amount of money. If you think $100 is small to you, then you can actually add more. If you think it's a bit of a challenge, then you could lower it also into something that you could actually do faithfully. Here's what I want to submit to all of you, that if you're having a hard time trying to sacrifice $100, think about the other things that you have bought that may have been more than $100 also. That you think about it, people are so scared about investing that if they try to look at it, you buy a rubber shoes, $100, 5,000 pesos. In 10 years time, that rubber shoe may not be worth anything anymore. You go on a weekend shopping spree in the mall, buy stuff. There's a big chance also that over a decade, that $100 may not be there anymore, or may not have any value, whatever you bought in the mall at that time. If it's a bag, it's a shoe, or whatever item, or if you ate there, for sure 10 years from now, whatever you spent during that weekend spree won't have any value. Or if you went into a staycation, nothing wrong with having a staycation, but what I'm saying is this: if you are struggling to figure out where will you get your investing, there are a lot of things that we spend on a regular basis that over a long period of time won't matter anymore or won't have any value anymore, and we're hesitating and we're scared to invest. That when you invest, especially into assets that historically have shown itself strong, or historically have shown itself that it either stores value or could actually appreciate, it would still be a better proposition than spending your money into something that won't have any value later on in the future. Imagine having the ability to buy the S&P 500 index, or buying individual companies such as Apple, Google, Microsoft, Amazon, superior companies. And what's interesting about that, I've said this over and over, all of these are available via Shari-Shari for $1, 50 pesos, that you can actually buy. So you can actually buy either the index, S&P 500, VOO is the ticker, or you can check out individual stocks from Microsoft, Google, Apple, Amazon, Facebook, etc., and then distribute them and actually try them. I'll put the link down below for more details on how you can buy US stocks for $1 or 50 pesos. And it's very fascinating. It's not just something that you get to enjoy because it doesn't require a large amount of capital, but you're learning in the process, but in the same way, you're building an asset class that, in my opinion, will fare much better than actually spending it. I want to continue with my example. $100 in VOO per month. So $100 in VOO per month in a yearly basis, that's $1,200 or roughly around 60,000 pesos if our peg is at 50. Now I'm gonna make some assumptions. So please do note that these are all just assumptions, meaning the market is volatile. There will be years that it will be up, there will be years that it will be down, there will be years that it will overperform, there will be years that it will underperform. The index in the US historically since 1957 has recorded an annualized average return of about 10.5%. So please do note that it won't be 10.5% every year. Please do note that it could be higher than that, or it could also be lower than that. But what I want to show you, at least just for these examples, it's me giving you a template that what if it doesn't earn anything? What if it earns lower than 10%? Or what if it earns higher? How would it actually look like? If you set aside $1,200 for 10 years, that's already $12,000. 12,000 that if you spent it, it would have been zero. Setting it aside, assuming it does not grow, you have $12,000 set aside. That's already an asset for you. Now that being said, allow me to show you that if it grows by 5% per year and you put in $1,200, its value would be around $15,000 in a 10-year period. 15,000 by you just starting with $100 a month. I think that's something that's fascinating. Assuming it grows instead of 5%, it grows by 8%, then that would give you around $70,400. So let's get more aggressive. Say it goes by 10%, which is close to the average of as what I've mentioned earlier. That would give you around $19,100 in return for 10 years. That would be your total assets invested should it grow by 10% over a 10-year period and you put in $100 per month. Now lastly, another example is if it grows by 12% over a 10-year period, then that would give you about $21,000. Imagine this, that if it performs better, of course, you will get a larger amount of money. What if instead of just putting $1,200, you decide that I'll double it. I'll put in $200 a month or $2,400 a year. With just the same methodology, you putting it in on a monthly basis, as you put it in on a regular basis over a 10-year period, how much would it actually be? If it earns about 5% per year, that would be around 30,000 US dollars. If it grows by 8% per year, then that would be about 34,700 US dollars. If it grows by 10% per year, that would be about 38,200 US dollars. And if it grows by 12% per year, then that would be about 42,100 US dollars. And what I've given you as an example is you being consistent over a 10-year period, and me giving examples also that what if you actually earn more, or what if the market actually performs better? This is what you would actually get. And I give you also another scenario that what if you increase the amount of money that you put in? And I assume most of you that are watching me are somehow at least in your 20s, 30s, or 40s, that you have more than 10 years in terms of runway up until you hit, say, 60 plus years old. So I want to make this assumption that what if instead of just investing for 10 years, you make it 20 years? And I've been investing for over 14 plus years now, close to 15 plus years, that it goes by so fast. So when people say that 10 years is too long, not really. If you enjoy what you're doing, and if you think that it's something that is building towards something for you, then it's actually fun. It's something that's actually good. $200 a month, 2,400 US dollars a year. Instead of 10 years, we're gonna make it 20. For 20 years, earning at 5% would give you around 79,300 US dollars. If it earns about 8%, then it would give you about 109,800 US dollars. Or if it earns by 10%, it would give you about 137,500 US dollars. Or if it earns by 12%, it would give you 172,900 US dollars. So please do note that all of these are just for illustration purposes, just to show you and simulate also how it would actually be if it earns by this much. But it's mainly to illustrate also the power of time, that the longer you are invested in it, the better it will be. Number two, the power of actually putting in more, because it doesn't really matter if it doubles, but you just placed your money one time, it won't really help you. The power of investing is basically putting in money on a regular basis to build a base and allowing time to multiply it for you, and putting it in an asset class that has proven itself. So please do note, and I just want to say this, that you don't buy just because I talk about it here. Don't just buy the index just because it's discussed here. Please take the time to learn about this. Please take the time also to build an understanding. Never ever buy something because you hear it from someone off of YouTube. It's your money, it's your responsibility. Please take the time to learn more about it. What I showed you, if you noticed it, it doesn't require you timing the market. It doesn't require you watching the market if it's bullish or bearish. It's just basically about you making a commitment to faithfully invest, to do auto investing on a regular basis, because it removes emotions, letting time work harder for you, and putting it into an asset class that has proven itself over a period of time. And that's via an index. So there are other indices that are available in Shari-Shari. I highly suggest after this video, log into their platform, check out what are the other indices that are there. The whole goal of this, the whole thrust of me talking to all of you about this, is to be able to somehow push you, to actually start and to actually see the value of doing it for the long term, disregarding your emotions, following your plan. And ultimately, this allows you to build a base that if you're in your 20s now, by the time you hit 40, 50, 60, it would be larger. If you're in your 30s and your 40s now, in the same way, you allow time and you're faithfully adding, it will just allow you to stack and build a larger base that when you get older, you will always thank yourself for, instead of spending it and putting it into stuff that don't matter. It allows you to build a base that will actually work hard for you. For those who want to know how you can actually do auto invest, you can check out Shari-Shari. I've talked about it via a video last month, but I'll put links in the description below so you get to know more about them. Basically, Shari-Shari is a Filipino-owned, and it's a platform that's regulated in the Philippines. But what's unique and interesting about them is it allows you to invest in US markets while being regulated in the Philippines. $1, 50 pesos only, and every time you buy and sell, it's basically commission free. You don't have to be charged every time you buy and every time you sell. So that's something that's interesting, especially for those who are starting out, or that's actually interesting for those who are very, very cost conscious also and want to actually transact regularly as well. If you want to enter their ecosystem, you can easily do that by bank transfers, or you can use GCash, PayMaya to be able to transfer money that automatically gets converted also into dollars, and that's what you're gonna use to be able to buy and sell. If you need anything, the people behind it are Filipinos, and also the customer service team are also Filipinos, that if you have questions, if you have queries, they'll be there to be able to answer you, to be able to help you. And it's nice to have a Filipino on the other end of the line who knows the context and the culture of the Philippines as well. For those who sent questions over the last month, how you get to withdraw. When you withdraw, it gets wired straight to your bank account. However, when you withdraw also, there's a $50 wire transfer fee, which is quite standard for a lot of platforms that are offshore, and when it's sent back to Philippine banking account. So my suggestion also in that is to batch it if you want to bring it back to the Philippines, that you relatively batch it in larger sizes so that it compensates also for the wire transfer fees as well. I hope that this video was something that was interesting, how auto investing can actually help you, and how you can do auto investing via Shari-Shari, and how Shari-Shari is a good platform for those who want to start investing as well. So this is what I'm gonna do. If you guys have any questions, put them down below, and we'll try to make videos of that based on the questions that you guys have sent out. And above and beyond that, I'll put links in the description below for you to be able to know more about Shari-Shari, for you to be able to read up, or for you to be able to try it as well. I want to know your thoughts about auto investing. Do let me know. The whole narrative of me making this video is just for you to be educated, that you get to leverage the market for you to be able to hit whatever goals that you want, and you get to use tools like Shari-Shari in order for you to be able to execute. So that this video is not just purely information or also inspiration, but this nudges you to be able to execute as well. I guess that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.